right, so credit cards. I know this one's going to be really good for you guys. And I'm definitely going to be saying some things that you've never heard before and never seen in the course before because I've seen the courses and I'm pretty sure you never heard any uh, TikTok guru going to be sharing some things I'm going to be sharing with you in this lesson. All right, so before we get into it, quick history lesson about credit cards. It started off as Diners Club, and that started off in 1950. And basically, how that worked was, these were a very small group of people, or elite class of people, like stockbrokers and lawyers and doctors and things of that nature. They would go out, enjoy themselves, and they would use this Diner Club card, which would be it was like a 30-day or a net 30 charge card. And so they'll get a bill in the mail, they'll pay the bill with a little interest, and that was that. And then later on, Bloomingdale's got into the game, and then Bank of America came along in 1958 with the Bank of America card, and they introduced the first general purpose credit card. All right. So when it comes down to what types of cards to pick, the best cards for you or the better cards are going to be the cards that have points versus cashback cards. Now, uh, in some cases, you will be getting some cashback cards. But as far as like on your personal consumer credit, point cards will be better for you to aim for. On the business side, you can do points and cashback. But later on, as we get further into this, you'll understand more why I say more points on the consumer side, and you can mix it up more on the business side. So how it works is, and this is not my opinion, this is just come from the banks and how they see their customer base and create products for their customer base. All right. So point cards are better than cashback programs. Cashback is for consumers that need money. This is like the psychology behind how the banks think about when they create this product. Points are for consumers that want the most value for their money, right? They're not looking to save money or get money back or anything like that. They make money, they have money, they spend money, they can pay their bills. They're just looking to get the best value for their money. And then travel credit cards are going to be the credit cards are going to offer the highest limits just in general. All right. And then bank issued flagship credit cards are better than co-branded cards. And one of the reasons why is because the flagship cards are going to offer better rewards program, and the points are portable. And I'll get further into that further in. So this is an example of co-branded and flagship cards. So flagship cards are cards that just have the bank or the car issuer's name on it. They don't have any other brand, store, airline, hotel, or anything like that on the card. Travel flagship travel cards. These cards are better because the points are more flexible. You can do more with them. And when it comes down to the co-branded cards, like if you use a Hilton or Delta Sky Miles or a Marriott Bonvoy, when you're spending money, you're building points to be used at these particular brands only. So you can only, redeem those points or best use those points at Hilton or at Delta or at the Marriott group, right? But when you have a flagship card, you can use those points. You can accumulate those points anywhere and use those points anywhere. Sometimes these co-branded cards, you only can accumulate points when you spend at those particular places. All right. And when it comes down to points, typically the breakdown on this is 1 point is worth 1 cent. This is not 100% always the case. Sometimes 1 point could be worth up to 7 cents, depending on how good you are at understanding travel and understanding these point systems. But basically, when it comes down to the points, 10,000 points is $100. 100,000 points is $1,000. You can use techniques to get these points up every single month and use them to either. I used to cash out on them. I used to increase my points up and then I would cash out on the points, and I would go pay bills with them. And later on, I learned that that wasn't a good idea because I could have, I learned better ways of how to turn those points into cash, and turn those points into larger sums of cash. All right. So, and then, so you do have cards that have preferred like spin categories. And if you use the cards within those preferred spin categories, instead of that point being worth 1 cent, it can be worth at least 1.5 to even 10 cents per point, right? Um, and then as like I said before, when you transfer points out, they can be worth anywhere between 1 and 7% depending on where you transfer them to. This is an example of what I'm talking about. This is one of American Express's credit cards. So as you see, when you spend or when you use their credit cards, they're giving you 5 times back, 4 times back, 3 times back, 1 times back, on different purchases and different spend categories with their bonuses and offers. This is something you're not going to get with a cashback card. You get so much more opportunity to get like basically just free money. All right. So how do you know when you won't get declined for a credit card? Oftentimes we get emails, we get mailers, we get ads, we get all type of different things that are coming at us that want us to, apply for a credit card. So there is the pre-selected, that language. You'll see that on email or on a mailer. You'll see you're pre-selected or you're pre-qualified, you're pre-approved, or is it none of the above? The product tier you're offered lets you know where you rank with that lender. So if they're offering you cashback cards, you're in a lower tier or lower ranking, like in their product category. If they're offering you points cards, travel cards, flagship cards, you're ranking a little bit higher. You have a higher credit score, you have a higher credit rating, or some type of information they have on you. They deem you as a more valuable customer. All right. So how do you know if you are going to be approved for a credit card? So this is an example of what I'm talking about. You get these emails saying, you're pre-selected, apply now, apply now. You got these bonus offers. We got this. So these type of emails, you're selected. This is just marketing. They have your email address, they have your name, they have some information about you. This is just blanketed marketing. This does not necessarily mean that you're going to be approved for one of these cards. They're just targeting you because they have access to your contact information, and they want you to apply for a credit card. This is an example of when you are highly likely to be approved for a credit card. As you see, it says that you are pre-approved for this credit card, and they're encouraging me to apply for this card. I saw this offer when I logged into my Chase app, and I just happened to click into this little category where for the offers, and boom, it was sitting right there, and it's saying, "Hey, you're like we're ready for you to apply for this card. Come take it." Now, how do I really know that I'll be approved for the card? One way to do that is they will give you an APR. They'll show you the APRs, the schedule and the tables, and they'll also show you if there's any fees or what you'll be paying for that, because they've already pretty much evaluated like what they want to do with you. So if you scroll down and they're showing you actually like numbers, APRs, the agreements, the pricing information, they've already done their analytics, already analyzed you and already pre-qualified you, and they're pretty sure that they want to give you the card. The credit pool is just going to determine, again, risk factor and how much that credit limit is going to be. All right, so these are some other examples of I was looking to get a loan, and I just happened to look up some banks, and I think I originally was pre-approved or something like that for like 20,000 or something like that. And I said, no, I can't take no $20,000 loan. I need $100,000 loan, right? So I looked on Credit Karma and I went to the banks or lenders that were offering me a loan. So these are the banks that already had some information on me. And what I did was I went in and I didn't go through Credit Karma. I went directly to the website and I put in information. I didn't fill out an application all the way, but I just put in some information that would trigger their system to offer me higher loans and pre-qualify me for higher loan limits. So now I'm getting offers and emails for like up to like $100,000 for a loan. Um, I'm looking for about 4 to 5 banks to offer me $100,000, and then I'll use a technique to go get all each loan from each bank for $100,000. So how do I know if you're actually going to be approved for a loan? Here's an example. They will give you terms. So they'll let you know what your loan payment is going to be. They'll let you know what your APR is going to be. They'll let you know what the terms and everything will be. You'll just go through, accept, upload any documents that you got to upload, and then they'll run your credit, and then that would determine your certified, like if this rate is going to hold up, and then they'll go ahead and fund your loan. So that is going to be some very powerful information when it comes down to knowing that you are going to be pre-approved. So I want to go back here. So again, it's going to say, hey, you're pre-approved. It's going to tell you about like a couple of features, things like that, to get you to apply. But that most important thing that you want to see is you want to see that there's actually pricing, terms, APRs, stuff like that, things of those nature. You'll and not like APR as far as, oh, you can get it at 0% APR, or you can get APR between this and the other. On here it shows what the starting APR would be, and then after a certain amount of time what the next APR be. It's telling you it's going to tell you what the late fees are. It's going to tell you what's going to happen if you miss a payment. All of that credit card agreement is going to be available for you to see. You're going to see all the pricing in it, and not just bullet points of, oh, we're offering this with this card for X amount of time. You're actually going to get pricing, this pricing table in there with that. So the way that you can exercise this or practice this, you can do this right now. Anybody can actually do this right now. You can go to NASA Federal Credit Union. You can just type in the address. I'll try to put the link down below the video, but you can type in this address here, and you can pre-qualify for one of their credit cards. If you are, they're going to tell you how much they're going to, the credit limit is going to be before you accept the card. This is a soft pull. It's not going to affect your credit at all. A soft pull does not affect, there's no hard inquiry. It's not going to affect your credit at all. Any and everybody can do this. If you are denied, you are going to get a letter or email, most likely a letter in the mail. And when that letter comes, you want to keep that letter, because on that letter is going to tell you exactly what you need to do to get approved, right? So this is going to be a very powerful step for you guys. So go ahead and good luck.